Hi, this is Tim Yoder with Fit Small Business, and today I want to teach you how to classify your transactions and reconcile your bank accounts in FreshBooks. So let's get started. Our first step has to be to classify the expenses as they're transferred in to our FreshBooks account. We need to classify the expenses before we can worry about reconciling the bank account. So let's do that. So here's our dashboard in FreshBooks. Now, before you can do any of this, you need to make sure that you have your bank account connected to FreshBooks. So if you're going to use FreshBooks, you really need to connect your bank account. Some other accounting software, you can get by without connecting it and enter your bank transactions directly into the software. With FreshBooks, you can't do that. All cash transactions are automatically recorded to petty cash. You then connect your bank account, and as those transactions are imported, they're transferred out of the petty cash account and into the bank account. So you really can't use FreshBooks if you don't connect your bank account. So word of warning, make sure your account is connected. That was covered in our first FreshBooks tutorial, but simply go up here to your cogwheel, and under bank connections you can connect your bank account. So you can see we already have US Bank connected to our trial company here. Okay, so now the first step, we want to classify these transactions that are being imported into our account. So I'm going to skip over the recently updated here, and let's just scroll down to all expenses. So these have been transferred in from our checking account. So here we can see that we paid KCTC and it's showing it as other expenses. Let's change that. So that's what it automatically classified it as. Let's change that just by clicking on it. We can bring it up to edit it. I'm going to go ahead and add KCTC as the merchant. And let's call this like utilities expense. Nope, don't need to create a new one. There we go, utilities. Okay, and we can assign it to a client and project. So if you are keeping track of expenses by client, by project, you're going to need to go in here. So it will never automatically assign a client or a project to your incoming expense transaction. So you'll have to go in here and edit each one individually, which is fine. At least the amounts, the dates show up, and you go in here and edit it. So good. So we've assigned it to KCTC and to utilities. So I'm just going to click the check mark, and there we go. So we're going to want to go down through here and classify each one of these transactions. Now notice, only the expense transactions, only the withdrawals from our checking account are showing up here. None of the deposits in our checking account are here. We're going to have to deal with them later when we do the reconciliation. This is just classifying the expenses. So we go through here. I recommend adding merchants just so that if you want to track payments to a particular merchant, it's easy to do so. I'm not going to right now for the sake of time, but you'll just want to go through here. Anything you want to edit, again, just click on it. You can add a merchant. You can just the account is getting charged to. You can assign it to a client and a project. If you want to, you can actually even attach a receipt. You can click there, upload the receipt. Okay, fantastic. That's how we go through and assign our withdrawals flowing through from our checking account. We assign them to expense accounts in FreshBooks. So the next step that we're going to do now is to reconcile our checking account. And this is going to comprise several different steps. So the first thing we're going to do is let's look at those cash outflows that we just assigned to expenses, and let's go into the reconciliation and actually make that match from the bank transaction to the FreshBooks transaction that we just edited and made sure was correct. So from our dashboard, we're going to go to Accounting in our left menu bar. And then we're going to click on these unmatched transactions under our bank reconciliation. So we have 17 imported transactions we need to match. Now this first screen are matches that it came up with automatically, right? So it sees that we had a bank transaction from KCTC for $109.21, and it sees that we've created a bank transaction or a FreshBooks transaction for that charge to utilities. Remember, I just did this, right? This was the transaction I went in and edited. Okay, so you could actually click confirm and continue and it would do a whole lot of this matching for you automatically. You should definitely scroll through it though and make sure you agree with all the matches that it came up with. But that will save you a fair amount of time. For right now, I'm going to skip because I want to show you how to do this reconciliation manually. Okay, but this could save you a fair amount of time, but let's say skip. Okay, so here we go, our reconciliation screen. So we have a bank account balance and we have a FreshBooks balance. Now the reason the FreshBooks balance is so much higher is that while we have the FreshBooks entries in there, in FreshBooks, right, we have not yet assigned them to this checking account. So again, all of your cash transactions in FreshBooks go into your petty cash account initially. They're not assigned to a specific checking account until we come into this bank reconciliation screen. So as we select FreshBooks entries, now I don't think it updates live, unfortunately, but as we select these QuickBooks entries, now these entries could be made in any checking account. So we're going to go through and we're going to match them to transactions in this particular checking account. Then it will transfer it out of the petty cash account and into this FreshBooks account, and into this FreshBooks checking account, and the expenses will reduce this amount. Okay, so once we get through here, these two amounts should be equal, although unfortunately I don't think this screen actually updates in real time. Okay, so let's go ahead and let's start matching these. So the first thing we want to do is we want to match our cash outflows to expenses. So here's an expense of $109.21. Let's go over here and find that, $519, $109.21. Okay, now we can see what we've selected in our bank matches what we've selected in FreshBooks. Okay, transfer deposited. So this is a deposit. Right now we're just worrying about we're just worrying about matching expenses. That's our first step. So reversed sales tax, maintenance fee waived. Again, these are increases in cash, and so we're only worried about expenses in this first step. So we have a sales tax of 45 cents. Over here we find sales tax of 45 cents. Okay, so let's back up. Okay, so here we have a match and a match. Now we have to click match here. There we go, and good. And now our FreshBooks balance did match. So now we can move on to the next one. I'm sorry, our FreshBooks balance did update here. So now we can move on to the next one. So we have the sales tax of 45 cents, sales tax of 45 cents. Hit match. Okay, now we have a maintenance fee of $7.45. Maintenance fee of $7.45. Match. Okay, we have an expense of $36. We go over here, expense of $36. Match. An expense of $200 and expense of $200. Match. Now these should all be pretty easy because the expenses you've already classified them in that first step, right? And so the expenses should already have a matching entry because that's what we did in the first step. And again, that first screen that we skipped over would have done a lot of these automatically had we allowed it to. So just continuing to find matches. This is the prior month's maintenance fee. We already did it for the current month. $672, $672, $1,017. Okay, Verizon $248.62. Okay, just about done. Home Depot of $302.72. And finally, we have this final check of $23.48. Now again, excellent, right? So that's the easy part. Those are the expenses, and those actually should pretty much always be able to find a match easily because you've already classified those expenses in the first step that we did. Okay, so let's hit this last match. Okay, now we have a couple of items left. All right, so let's flip back to our guidelines here. So what is the next thing that we want to do? Next thing we want to do is to match our cash inflows to our existing cash collections. Okay, so match our cash inflows to our existing cash collections. So we have this one inflow here of $2,000. Okay, so we're going to click that, and now we need to find the cash collections over here that equal $2,000. Well, we collected $500 from Jenny Tan, and we collected $1,000 from Dan A. North Builders. So that's $1,500, but I'm looking and there's another mystery $500, right? So I need to go back through my deposit slip of this $2,000 and figure out what is that extra $500. Okay, well, I've done that, and I figured out, okay, there was another $500 from a customer that I forgot to record as being collected in FreshBooks. So I can do that right from this screen. So I need to create a new entry. So create a new entry, and it's an invoice payment we received from a customer and forgot to record. And it was this Baker's Professional Lighting. So if we look, that's the only invoice we have outstanding. That's the $500 we collected and forgot to record. I'm going to click next. So $500 was paid in a check, and it was on the 13th of May. Okay, and there we go. So I can add this payment. Now I want to notice something here. Nowhere in this payment does it allow me to specify which checking account this payment was deposited in. And that's true for whenever you're working with expenses and with payments received in FreshBooks. You're never able to tell it which cash account it's coming into or going out of, right? Everything goes to petty cash until you get to this bank reconciliation screen. That's what transfers the transactions into a particular checking account. Okay, so let's hit add payment. Now if we were to go to our invoices section, we'll see that amount is paid for, but I am not going to go do that right now. And so now we can see this $500 from Baker's Professional showed up, so I can click match, and now we have $2,000 and $2,000. So when I click match here, what it's going to do is it is going to draw that $2,000. It's going to remove that $2,000 from petty cash and put it into the checking account activity. Okay, and so the FreshBooks balance of the checking account has now been updated. Okay, now our last item to address in our bank reconciliation is to mark any other inflows we have as transfers, owner's equity, or expense refunds. So this is a little bit different, but in FreshBooks you can't create these transactions without doing it in this reconciliation screen. So you're not allowed to enter journal entries in FreshBooks. Only your accountant user can enter journal entries. So this is where we create those. So let's go back to the screen and I'll show you what I'm talking about. So this reversed sales tax, that's an expense refund, right? So I'm going to mark it. Okay, put a check mark, and then I want to go up here and I want to go mark as an expense refund. Okay, and let's add a category. I didn't pay attention to where those other ones were going, but probably bank fees. Okay, and I can hit submit, and there we go. It created a journal entry and automatically matched it. Okay, same thing I want to do with this. I'm going to mark that as an expense refund of bank fees. Submit. Now notice when I hit submit, it's going to affect this FreshBooks balance. Okay, and there we go. So when I create entries by using this mark as, that's going to automatically create the FreshBooks entry and then match it to the bank transaction. Okay, so now we can see that our account is reconciled. Our bank account balance is equal to our FreshBooks balance. Now, we have a couple of entries left here, right? So these are entries that did not go through our checking account. So we need to look at them and make sure that they appear correct. So a couple of reasons we could have entries here. One is that they went through a different checking account. So if you have two active checking accounts, this is going to be a little bit confusing because when you reconcile each checking account, it's going to have all the same entries here. Okay, again, these are entries that are in the petty cash account that have not yet been assigned to a checking account. So we have a payment to $1,200 to our accounting firm. Does that seem reasonable? Yeah, especially if we wrote a check, right? So we've written a check, it hasn't cleared the bank yet. That's what we call an outstanding check, and so that's fine for it to be there. We have advertising expense for KCTC for June and $300. So does that seem correct? I don't know, right? We need to think about it. So again, the two reasons it could be there: either it hasn't cleared this bank account yet, or it belongs in another bank account, or perhaps it was an actual petty cash transaction. Okay, so we're going to assume both of those look correct, but make sure you review those and that they make sense before you reconcile your account. So here we go. We are now reconciled. Next thing to do is to print what they call a reconciliation summary. This is really not what an accountant would call a reconciliation summary. Basically, what this reconciliation summary shows are these unmatched expenses. So again, these are things that are still in our petty cash account that are not in our checking account, that have not cleared the bank. So nowhere in here does it show the cleared balance in our bank account and how that reconciles to our bank account balance in FreshBooks. That's what a reconciliation report generally does. So FreshBooks calls this a reconciliation report. I would argue that it's not really a reconciliation report, but it is still useful. Make sure you review these transactions that have not yet been matched. Okay, well great. So that's how you reconcile your bank account in FreshBooks. I do want to show you one more thing here because I've been talking a lot about how the cash flow works in FreshBooks. So let me make sure you understand what I'm talking about. So let's look at our balance sheet. You'll notice our balance sheet only shows one cash account. This is the sum of our petty cash account and all of the checking accounts we have. So that number is a little bit hard to interpret or to understand or to match to something if we're worried about individual checking accounts. So if we're worried about an individual checking account, we need to view it in our trial balance. So if we go to our trial balance, here shows our US Bank checking account with the balance we just reconciled of $14,15.79. And here is our petty cash account. So again, the way FreshBooks handles the cash transactions is everything gets booked to petty cash initially. Then when you reconcile an account, as you match transactions from FreshBooks to that checking account, it removes that transaction from petty cash to your checking account. Okay, so want to make sure we're clear on that because that is something FreshBooks, they're very innovative. They always try to make things simple for the user. They're not scared to think outside of the box, and this cash treatment is definitely outside of the box. I've never seen another software that does this. Whether or not it hits the mark, I'll let you decide. As an accountant, I'm very used to how reconciliations work, and so to me this was a little bit confusing. But as a small business owner, you might really like it, and that's good. That's who they're aiming for with this FreshBook feature. Little strange, but once you get to know it, I think you might really like it. So again, my name was Tim Yoder. I am with Fit Small Business, and I hope this was helpful in learning how to manage your bank feed, how to match those bank transactions, and then how to reconcile your checking account. If you would like more help with FreshBooks, we have 5 free FreshBooks tutorials, and I'll throw a link in the description so that you can find all 5 of those. Thank you very much. I hope you have a great day.